And welcome to Inside India. I'm Christine Tan, sitting in for Sri Jegarajah. Here are your headlines today. Oil prices extending declines as President Trump failed to exert further pressure on Russian President Vladimir Putin, with no word if he will ramp up sanctions on India like he initially said he would. All eyes are now on August 27th, when Trump's additional 25% tariffs on India will take effect. Ahead of that, reports emerging that the next round of U.S.-India trade talks for August 25th has been called off. The Indian markets return from their long weekend, where investors will get their first chance to react to Prime Minister Modi's GST announcements, the country's biggest tax overhaul in 8 years. Right, we're looking at Asian markets today and looking at a little bit of a mixed picture, as you can see on the screen right now. Pretty much wait-and-see mode, a lot of trade tensions, tariff impact, that seems to be looming ahead in front of investors' minds. A lot of wait-and-see happening as well. Oil prices are also pulling back this morning, extending last week's losses after U.S.-Russian talks wrapped up on Friday. Markets expect sanctions on Russian oil may ease if a ceasefire is reached, but many details still need to be worked out. NBC's Von Hillard has more.
Ukrainian President Volodymyr Zelensky returning to the White House for his pivotal meeting tomorrow with President Trump. Zelensky will come flanked in solidarity by European leaders, the UK and Italian prime ministers, the presidents of France and Finland, the German chancellor, and the heads of both NATO and the European Commission.
Ukraine can always count on Europe.
Zelensky in Brussels today.
We are deciding what we are going to discuss in Washington,
hoping for a different outcome than his last visit to the Oval Office in February.
Have you said thank you once this entire meeting? No, in this entire meeting, have you said thank you?
You don't have the cards.
The White House still trying to mediate an end to Russia's war. After Trump's stately fanfare and sit-down with Putin Friday, his negotiators largely tight-lipped about the details.
Can you name one thing that President Trump is asking Russia to give up in order to get peace?
Well, I'm not going to disclose those things.
Secretary Rubio also pushing back on suggestions that the White House will try to pressure Zelensky to cede some land.
No one's pushing Ukraine to give that up.
But shortly after that interview, Trump contradicting that, reposting on Truth Social one user's statement: Ukraine must be willing to lose some territory to Russia. Otherwise, the longer the war goes on, they will keep losing even more land. Former National Security Advisor Jake Sullivan rejecting assertions that Russia is militarily winning.
Russia right now is trying to achieve diplomatically what they cannot achieve militarily.
And in a pivot, Trump, earlier this year, not committing to future security protections for Ukraine as part of any deal.
I'm not going to make security guarantees beyond very much. We're going to have Europe do that.
Though his special envoy, Steve Witkoff,
we agreed to robust security guarantees that I would describe as game-changing.
Well, after that meeting, U.S. President Donald Trump saying he's not considering immediate tariffs on China over the country's Russian oil purchases, but he's still keeping the door open, saying that could happen in, quote, 2 or 3 weeks. Remember, India, meanwhile, is facing 50% tariffs for buying Russian oil. And as the additional 25% tariffs on India take effect next week, reports say a U.S. delegation's visit to New Delhi has been called off, dashing hopes of any relief. The sixth round of trade talks, scheduled for August 25th to 29, has now been postponed until further notice. There have been no comments from President Trump on India since the announcement on the new tariffs. Well, while India's ties with the U.S. seem tricky, there are signs of a thaw with China. Chinese Foreign Minister Wang Yi arrives in New Delhi today for a 3-day visit. Both countries will discuss the disputed Himalayan border, a flashpoint since the 2020 clash. Indian Prime Minister Narendra Modi is also expected to visit China later this month for the Shanghai Cooperation Organization Summit. Well, the Indian markets come online in about 40 minutes. Here's what Gift Nifty futures are indicating. Take a look at the boards and see how it is set to open. Futures are pointing to a positive start, 1.4% higher. It last closed the session on Thursday at 24,631. Dollar rupee sitting at 87.4840. Right, the big story overnight, Indian Prime Minister Modi promising consumer tax reforms during his Independence Day address on Friday. Following Modi's speech, the country's finance ministry detailed that the overhaul will be based on structural reforms, rate rationalization and ease of living. Multiple media reports quoting government officials on India's plans to simplify the taxes into two brackets of 5% and 18%, phasing out the 12% and the 28% rates. Nearly all items in the 12% bracket, like butter, juices and dry fruits, could move to 5%, easing costs for consumers and companies. It will be India's deepest tax cuts in over 8 years. The GST Council is set to consider these changes at its next meeting in early September.
We are coming up with next generation goods and service tax reforms. It will be a gift for you on the occasion of Diwali. Taxes on basic essentials will be heavily reduced. Our MSMEs and small entrepreneurs will gain from it. Everyday essentials will become cheaper, and this will provide a new strength to the country's economy.
Well, let's talk about commercial real estate. Indian office space provider Smartworks is expanding into Singapore with 2 new facilities. Its first move outside its home market. The company listed on India's National Stock Exchange last month and saw losses narrowing by 82% on year in its first quarterly report post-IPO. The stock has gained over 2% since listing. Harsh Binani is the co-founder of Smartworks, and he joins us in our Singapore studios. Harsh, good to have you with us. Now, you've expanded into Singapore, 2 centres here in Singapore, I believe, talking about 35,000 square feet. First move outside of India. What's your rationale, and how do you see your brand translating or in this particular market?
Thank you so much, firstly, for having me here. It's a very momentous occasion for Smartworks. Just about last month, we listed in the Indian public markets. It's been a very volatile year for the markets in general, but our IPO got oversubscribed by more than 14 times, demonstrating, the resilience of the business model. Smartworks, in less than a decade, I would say, which includes, by the way, 2 years of COVID, has emerged as India's largest managed office platform. Today, we are spread across 12 million square foot across 15 cities, which also includes Singapore. Now, our entry into Singapore was extremely strategic. Keppel Land has been a very important strategic investor in the company.
So you're using their influence and their networks?
They've been a phenomenal partner, and their backing not only demonstrates the India growth story, but the fact that this business model has a potential to go global. And particularly with Keppel, we've expanded to 2 centers in Singapore, and it demonstrates that global capital now is backing India's flex space revolution, which is where Smartworks has been expanding. And our presence in Singapore is symbolic, not only because of geography, but also it demonstrates a launch pad, which is very important because it becomes a gateway for us to scale to 2 most important office markets in Asia, and I would say potentially the world, India and Southeast Asia. And I would say we are today just getting started. If in less than 8 years we've scaled up to 12 million, this model has a lot more potential going forward.
Okay, so Smartworks is using Singapore as a launch pad to get into the rest of Southeast Asia. Which other countries or cities are you eyeing next?
Currently, our focus continues to remain India, and it's very important to recognize why India is very important. India is going to add about 1 billion square foot of office space in the next 10 to 15 years. And when I say 1 billion square foot, what that basically means, it's more than New York and London combined. India is the fastest growing economy in the world, and particularly Indian companies need a lot of office space. But what has importantly happened in the last 5-6 years is a structural shift in client demand. And more importantly, India is now becoming the office to the world. Global MNCs, GCCs are all embracing India in a big way. So for now, our focus continues to remain in India because we feel that India is very underpenetrated, and every third deal in India practically is a flex deal. If within that Smartworks is the largest, we see a lot of potential. However, having said that, we firmly believe in the near term, with our Singapore entry now, we get an important platform to potentially now become the Asia's largest platform. So for immediate next couple of years, there is no plan to expand into Southeast Asia. We perhaps will grow more in Singapore, but clearly in the near to medium term, you'll see more expansion happening.
Okay, so whether it's in India or Singapore, you're facing huge competition. There's a lot of competitors out there, also in the co-working space, also in the flexible co-working space. How do you differentiate yourself? How do you compete? What do you offer that others don't?
Look, Smartworks in a very short period of time has created a very unique category, which is managed office platform. And very early on when we started the business, we recognize the pulse of India. India is a large market, growing very fast, but India demands flexibility and value. So from early days, we pivoted away from co-working, which was basically the global model, to create this office platform model. Think of it like we take really large buildings, which we convert into campuses, which has all aspirational amenities which you'll see in a developed market like creche, gym, food court. And that takes advantage of one unique aspect of India, which is that about 75% of our real estate supply is fragmented and non-institutional, which is very unlike Singapore. So if you are able to take this non-institutional supply, convert it into a world-class platform, and then get mid to large enterprises, global MNCs, and our clients today include likes of Google, Accenture, EY, and a lot of Indian conglomerates. What you have is a very powerful combination where we get REIT-like continuous cash flows because these enterprises continue paying us for long term and expand with us. And where this makes us extremely unique is A, we take full campuses, which no one else does. B, we have more than 85% of our revenue coming from large enterprises. And interestingly,
so basically you need anchor tenants, huge, big anchor tenants like Google to occupy the whole campus-like structure in your co-working space.
Partly because they do occupy reasonable space, but we have a very well-diversified client base. We have more than 800 plus clients. And what makes this model very robust is that we are very capital efficient. And today we have cost leadership. No one can create office spaces and the entire experience at the cost that we do. And we've been able to scale up very efficiently. Can you imagine that we've scaled up to 12 million square foot without IPO with just about 70 mil SGD? And that just demonstrates both cost efficiency and capital efficiency.
Okay, so walk us through the financial discipline that you put the company through and how that's fueling your scalability.
Financial discipline has been at the core of how Smartworks has scaled up sustainably. In the last 5 years, we've grown at more than 40% CAGR when it comes to revenue. And this includes, by the way, the period of COVID, where our model got really tested. And we were very resilient during this period because A, we had large enterprises who continued to pay us and scale with us. And post-COVID, we were able to scale up more sustainably. So during this period, you will see from last quarter, our margin has almost doubled from 9% to 16% now. But more importantly, our business is not only about revenue growth and profitability. The real strength of our business is in its cash flows. And we recognize that for businesses which need to scale fast, you want to continue scaling up in a sustainable manner. And today we can foresee that we can continue growing 25 to 30% every year after IPO without any external funding.
What is your average payback period like? I mean, for your Singapore offices, 2 centers here, what are we looking at, time frame?
So typically Singapore is an example where we lease smaller centers because that's the nature of the market. In India, which is our typical model, where we take full buildings, our average payback is actually less than 3 years. And in Singapore, you'll be surprised to know it's even more superior because we've been able to get a lot of Indian ingenuity, particularly around our cost efficiency, and make it more viable. So going forward, if you imagine that we take a full building, right, for 15 years, if our payback is less than 3 years, one building's cash flow and earning can open 5 new campuses. So that demonstrates how cash flow accretive this business is. And that's why we've been able to scale up with just about less than about 73 million or so, right, SGD, and scale up such a large business without IPO.
I'm assuming you're leasing out space or you're leasing space for your clients. I'm assuming that you have to find real estate. How do you factor in inflation costs? Real estate is going up, costs are going up. How do you build that into your business model?
We are a fully asset-light platform. We lease large campuses for about 15 to 20 years, but obviously we scale it up once we have some commitment from our large tenants. And today, the scale-up is such that we are able to scale up across India. So about 30% of our revenues come from multi-city clients. So they continue growing with us. For example, a Fortune 500 company, they've moved more than 70% of their India's office portfolio to us. They scaled in less than 3 years from about 150 seats to about 7,800. And on your second question, particularly around how do we manage inflation, we are a value price player. We are a dollar shop. Our rentals...
You're a dollar shop.
We are a dollar shop. Because our rentals, because we lease full campuses, we are able to get superior rentals from our landlords because it's a win-win relationship for them because we are the only tenant for them. But more importantly, because of our cost efficiency, where both our capex cost and because we manage the entire building, right, with more than 30 services, you're able to bring down your entire operational cost also meaningfully. So yes, India is now, by the way, also entering into a low inflation zone. But regardless of that, we believe our operational excellence initiatives will continue keeping our costs low. Sure. And we'll pass on that to our customer because we know India loves value and India loves being a dollar shop as you scale up. So that's going to be the secret formula as we continue scaling up.
I've got to ask you, Harsh, about AI changing how companies operate. Are you seeing new demands from your clients in terms of the needs when it comes to design and flexibility? And how are you catering to those needs?
So there are two unique aspects to AI. One is on the demand side, what it is doing to our clients, and the other is how do we use AI within the company to become more productive. AI clearly is going to be the future, and there's a lot of change that all of us need to embrace. And with AI, now we are starting to see a lot of global companies open up large capability centers in India. And that's where we are continuing to see increased office demand. While India has always been known for IT, ITES, in the last 3 years, we recognize that it might start to face pressure with AI, etc. coming in. So we intelligently diversify to other sectors like BFSI, manufacturing, healthcare, which always are very stable, but AI is also impacting them and creating more opportunities for us. So in some ways, as long as AI continues to scale up, you'll still need more people and more office space. So clearly we will have opportunities there. And today, AI technology is how we've scaled up faster. So we deliver fully built out office spaces, customized for the clients with the entire experience like a hotel, all within 60 days, which by the way is a game changer, right? Because earlier, when traditional offices used to do it themselves, it used to be about 6 to 9 months. So today, technology has enabled us to grow faster. We have a proprietary platform called BuildX, which enables us to deliver office spaces in 60 days. And just, for context, right, India has become very used to fast delivery, speed, efficiency. Like today, you can get groceries in 10 minutes. So office in 60 days is like a big change. And here, in BuildX, now we've integrated AI modules. So our design speed for offices has become faster. Management of the entire building and customers has also become much more easier. So we believe at this point of time, rather than seeing AI as a challenge, why not embrace it as an opportunity and scale up to cater to more clients and also grow faster internally?
Sounds exciting. Very quickly, earnings outlook, revenue outlook.
We have been scaling up very rapidly. Our model is very scalable because for us to grow by 2.5 to 3 million square foot every year, what makes it unique is that we only need to take about 7 to 8 campuses. That's it. Versus average co-working, which typically takes about 30,000 square foot. So our view is that rather than taking 100 floors, full buildings are more efficient. So for the foreseeable future, we anticipate growing from 12 million square foot to about 30 million square foot in the next 5 years, moving from becoming India's largest to Asia's largest. On the EBITDA side, as I mentioned earlier, our margins have grown from 9 to 16%.
Could you do better?
We will continue doing better and also pass on savings to our customer. But more importantly, with scale, you'll get operating leverage, right? Your costs continue to reduce, both on acquisition, admin costs. So that will expand our margin. So far, we haven't focused on ancillary revenue. But can you imagine this platform in 5 years will have 500,000 people coming every day. Whether they consume food, grocery, laundry, all of that will be monetized. So you'll expand there. But most importantly, as I had mentioned before, the strength of the company is in its cash flows.
Sure.
So our return on capital employed is actually doubled last year. And we are well on path to doubling that even more in the next few years.
Okay.
So that's where we believe this is a very, very promising story.
Okay.
And with Singapore and India, we believe we are well positioned now to scale to
Singapore
Asia.
and India, what's next?
Southeast Asia and Asia, we'll see. But India for now is the core, and we'll scale up.
You're not telling me, are you?
I think we'll continue growing more in India, and that will be a big opportunity.
Okay, Harsh, thank you so much for your time. Great talking to you.
Thank you so much.
We're looking forward to see where you expand to next.
Thank
Big
you.
question mark there. And that was Harsh Binani from Smartworks, talking us about the flexible co-working space. Coming up next, we'll bring you latest news and updates, including President Trump's stealth tariff threat and Fed's Chair Jackson Hole Symposium. Stay tuned. Welcome back. We're keeping an eye on what's happening stateside. It will be a big week for the dollar and bond markets. Checking in on U.S. Treasuries right now and see how that is stacking up. The yield for the 10-year sitting at 4.3062 and at the long end 4.904. We're waiting, of course, for Fed Chair Jay Powell's speech at Jackson Hole this Friday to set the tone for the Fed's policy path ahead. Markets now pricing in 85% odds of a 25 basis point cut in its upcoming September meeting. Following the release of mixed CPI and PPI prints last week, Chicago Fed President Austin Goolsbee weighed in on the Fed's policy challenges in a CNBC exclusive.
What's happened is we've added a lot of uncertainty and we've added a lot of dirt in the air, which much of it has come from tariffs. And the tariffs, the theory that tariffs are a one-time price increase, that's true for one and done tariffs. And these haven't been one or done. And so we're trying to grapple with this idea of, is this going to be a persistent inflation shock? Is this going to be stagflationary in direction, which is to say it's going to be driving down employment at the same time as driving up prices? That's the worst thing the central bank has to think through because there's not an obvious playbook.
Meanwhile, U.S. Treasury Secretary Scott Bessent saying that the Bank of Japan is, quote, falling behind the curve. Lin joins us now with more on how Japan has responded to this. Lin?
Indeed, Christine, we've heard from a number of Japanese politicians basically trying to brush it off, shrug it off, saying that this isn't a sign of the US asking or requesting Japan to raise its interest rates. But since the comments, we have seen Japanese assets, key Japanese assets in terms of the currency, in terms of JGBs as well, moving off the back, which is suggestive here that market is potentially expecting that there could be an interest rate hike, not necessarily at the next meeting, which is in September, but potentially in October or in December as well. Certainly this comment about Japan being behind the curve here is linked to the Japanese currency. And when we think about, for example, trade negotiations, this was something that people had feared, that potentially the US would want to link the currency to the trade agreement. Now, that hasn't happened. However, the concerns that we are hearing, we've heard before. If you take, for example, in June, the Treasury report to Congress noted, and I'm basically paraphrasing here, but it said that the BOJ needs to respond to the domestic conditions in terms of inflation and growth, with an eye on normalizing yen weakness and rebalancing the bilateral trade. So I guess on that front, certainly, there will be a lot of focus on Jackson Hole and on the signals that the Fed Chair Jerome Powell might be sending about potential rate cuts from the US side because of how that might impact expectations around the interest rate differential between the two countries. But in terms of the criticism itself, we have heard it before, right? And ultimately it comes down to the different interpretations when it comes to Japanese inflation, because certainly it has been above the Bank of Japan's target rate since around mid-2022. But the BOJ has been consistent in arguing that it's because they haven't seen enough of that demand pull inflation, that a lot of the inflation that Japan has been experiencing has been cost push. It has been imported inflation. It has been inflation that they believe is transitory because of various supply shocks as well. So that is certainly the kind of picture that we're contending with at the moment, and we look ahead now to Friday's inflation numbers for Japan as well for July.
And that's going to be key, right? That's going to be something the BOJ is going to be watching very closely. Indeed. Thank you so much for that, Lynn there, talking to us about the BOJ. Well, coming up next, IKEA. That's right, IKEA saying hello to New Delhi last week. We'll speak to the company's India CEO next on business in the country and expansion plans. Let's do a quick check on Asian markets to see how it is stacking out beginning of the week Monday. There's a little bit of a mixed picture, as you can see on the screens right now. A little bit of wait and see. Trade tariffs also weighing on sentiment. Elsewhere, we are looking at NBC's Contessa Brewer having more on what we're watching for this week in the U.S. this week, including Fed's Jackson Hole Symposium this Friday.
A housing market checkup, clues to the Fed's next moves, and a big play in sports streaming, all in the week ahead. First up, a big week for retail earnings and more clues on the state of the American consumer. Walmart, Target, and Home Depot are all on tap to share results in the week ahead. Plus, a dump of housing data with a look at how home builders are feeling. That happens Monday. The latest on residential construction with housing starts and building permits Tuesday, and data on sales of previously owned homes Thursday. On Wednesday, the Federal Reserve will release the minutes from its July meeting. The central bank kept the benchmark borrowing rate unchanged despite intense pressure from the Trump administration to make a cut. The data comes out a couple days before the Fed's 2025 Economic Symposium begins in Jackson Hole, Wyoming. Fed Chair Jerome Powell is expected to give remarks at the event on Friday. Google is expected to launch its latest hardware at the Made by Google event Wednesday. And finally, ESPN and Fox's streaming services launch Thursday, just ahead of the college football and NFL seasons. ESPN service will cost $29.99 a month, while Fox One will be $19.99, or you can bundle the two for $39.99. I'm Contessa Brewer. Get all your business news on CNBC.
Well, we're counting down to the market open in India. This is how we are shaping up for the session. As you can see, the Nifty futures pointing to a positive start. Nifty 50 sitting unchanged on Thursday at 24,631. That is where it's set to open. And dollar rupee is sitting at 87.4390. Well, in the news, Apple supplier Foxconn has started iPhone 17 production in Bengaluru, India, at a small scale. This is in addition to its Chennai factory. The Bengaluru unit, Foxconn's second largest outside China, cost nearly $3 billion to set up. Apple plans to boost iPhone production to 60 million units in 2025, up from 35 to 40 million this year. Recent data show most iPhones sold in the U.S. in June 2025 were assembled in India. Elsewhere, Samsung has started making laptops in India as well. Reports say the South Korean electronics giant is manufacturing laptops at its Greater Noida factory, adding to existing production of phones, tablets, and wearables. The plant, one of Samsung's first global facilities in India since 1996, is part of the company's plan to expand advanced device manufacturing in the country. India is now home to Samsung's second largest mobile phone unit. Elsewhere, speaking of foreign companies in India, Swedish home furnishings giant IKEA opened its first store in New Delhi last week after launching e-commerce for the area earlier this year. The new store marks IKEA's first entry into North India, but it's not the full IKEA experience. The company is focusing on smaller stores in crowded cities where big outlets are not feasible. IKEA already operates in Hyderabad, Navi Mumbai, and Bengaluru. Patrick Anthony is the CEO of IKEA India. He joins me live from Bengaluru. Patrick, good to have you with us. Thank you so much for joining us. Hey, I got to ask you, why set up a physical store in India when you're not giving the full IKEA experience?
Hi, first of all, thanks for having us here. We're very happy to enter the Delhi market also with a physical store this last week. As you mentioned, 6 months ago, we opened e-commerce, and we're now complementing it with a 1,500 square meter or 15,000 square feet store. It's a part of the omni-channel experience that we're trying to give our customers in today's modern world, so to speak. We are adding 2 full-size stores to this mix the coming years and more of various formats in the city. So a customer can really truly choose how to shop and also get the chance to interact physically with the range, with the co-workers, with the food in the smaller touch points or later on in our bigger full-format stores.
Patrick, got to ask you, what are you seeing in terms of consumer demand in India? I mean, on Friday we heard that President Modi, or Prime Minister Modi rather, is going to do a decisive cut when it comes to the GST tax. That ought to fuel some buying, that ought to fuel some demand. What are you seeing? Are you hopeful that people will start spending more on their homes and buy more from IKEA?
We see a huge opportunity in the coming period in India. IKEA is a company with a very long-term perspective. We've entered the market with our retail stores about 7 years ago, and we look ahead for the coming development of maybe 30, 40, 50 years. And we see India as one of the most promising markets around the world, both the economical development doing very well and the whole demographics with very young nation is looking potentially very good for us in IKEA. And hence the short term ups and downs we don't really bother so much about. We're creating our agenda where we focus on becoming affordable, really trying to set up more local sourcing in India. We're trying to be more accessible with our new touch points, new formats, online developments, as well as working on our sustainability agenda where we look at how we can both produce products in a better way as well as putting the right type of energy into our facilities.
You're providing the omni-channel experience, I get it. But in a market like India, where e-commerce, where you started on e-commerce, has it been able to replicate the IKEA experience, or do you see consumers eventually veering back to the online experience?
We see that the people choose their way of shopping today. However, most of the IKEA customers around the world are using a multitude of touch points. So you use online for research, you go to a store or another touch points to really explore the furniture, test, try, speak to coworkers, then maybe you go back home and shop online. That's one type of a journey. Then of course in white areas where we don't have a store, people then choose to shop online. However, we can see when there is a combination of formats, the average ticket is much higher, the penetration is much higher. So we believe the optimal solution for us and our customers going forward is a mixed environment where we combine online maybe as a base where everybody can reach, the bigger physical stores when you want to get a lot of inspiration or so, or the physical stores, smaller ones when you want to be near your home and you don't have so much time.
Okay, Patrick, IKEA is known for our DIY furniture, and I know because you're here in Singapore, and I do go to IKEA stores, and you're known for your interesting and very beautiful Scandinavian designs. Did you have to change the way you design the furniture, your accessories, just to suit more the Indian homes and Indian lifestyle?
In general, we have brought the same range to India as we sell everywhere else because it's the part of the brand. Then we see that some activities in the home in India is slightly different, so we've adjusted it. One big area has been actually kind of a humidity proofing range, because we see that especially how people are washing, how the Indians are washing their homes is quite different situations. So it's much more water on the floor and so on. So we have now lifted a lot of the furniture on little pegs in order to allow for this. So this may be the biggest adjustment we've done. Otherwise, we really want all Indians to experience the same IKEA as in the rest of the world. Then gap fillers for products that are needed here, that are not needed, especially around cooking, where the Indians cook slightly different to people in other countries where we've added different products, as well as maybe sleeping, where both here and in other Asian countries we see that people prefer a much firmer mattress, and hence we have firmed up the mattress range to better fit the local needs.
Okay, so you have made some slight adjustments and changes. And just between you and me, I hate the humidity as well. India is also a very value-conscious market. Are you able to balance the affordability while staying true to IKEA's brand and quality?
Yeah, we believe so. We have invested a lot in pricing at the lower price points. So we have about 750 articles below 100 rupees, which is about €1 or about $1 also actually. So there is something for everyone to shop at IKEA. So you don't have to have a big wallet to come to IKEA at all. So whoever wants to have an experience of the IKEA brand and our range can come to IKEA and shop a number of products that will fit your household.
Patrick, you've spoken about sourcing more from India. I believe the figure out there you've thrown out is something like 50%. How much of your product range is now being sourced from India and how much is locally made? And what's your goal or what's your key targets to up that amount or that percentage?
So currently around 30% of the products we sell in India are locally made. The biggest chunk, of course, being in textiles, but we're expanding in metal and plastics. The next one to really crack is furniture production and wardrobes, kitchens, and so on. And here we are a little bit challenged so far by the availability of wood, but we're working on many sides to get access to sustainably sourced wood, because we have very high demand on the quality and the way the wood has been growing and how we treat the people who work in these areas. And this type of certified wood is hard to get access to today in India. But we are also adjusting a little bit our demands, not demands on the wood, but the wood types. We have previously preferred a lot of blonde woods, of course, but we're now looking at mango wood. We're looking at some other woods that we can use as well.
It sounds like you're already doing a lot of sourcing in India. Is it possible that you could be using India as a manufacturing hub for some of the other IKEA markets?
Already today, the majority of the products that are made in India are actually exported. So India is already a hub for mainly textiles, plastic, and metals, which we export to all markets around the IKEA world. Now we're hoping then by expanding into furniture production as well, that we will be able to make in India and also export furniture. So we have high hopes on growing our share of exported furniture out of India. So absolutely, yes, there is a big potential for India to grow as a furniture hub for IKEA around the world.
Okay, so in terms of stores, in terms of sales, what is your outlook for the Indian market? What would your footprint look like in the next 5 years?
We haven't launched the new vision of Vision 30, or what we call it, so I cannot tell you exactly the numbers now here, but the ambition is to grow much more rapid. We're looking at rolling out new touch points a couple of times a year the coming years, as well as then in parallel grow the local sourcing. Because that's the positive spin we can get on things, is really when we open new touch point, we increase the volumes, and we can get even better prices at our suppliers, because they get more predictability and bigger volumes, and hence we can serve even more of the Indian customers with a range that is well priced and adapted to the needs here.
Is India one of your most profitable markets, Patrick?
Not yet, but we have hopes that in the near future it will be. India has a huge potential. There's no discussion. We see, as I say, both the economical development now being one of the fastest growing markets in the world, as well as the demographic being key to a future very potential market for IKEA.
Patrick, thank you so much for your time. Great talking to you, great insights. Patrick Anthony from IKEA India. Well, we're counting down to the market open in Mumbai. We're back in 2 minutes. Stay with us. Welcome back. Indian markets are coming online right now. The Nifty 50 is trading like this, as you can see, to the upside, 24,931, and it's 1.2% higher. A dollar rupee sitting at 87.38. Well, in that market, a quick check on the automakers listed in Mumbai. They are all trading to the upside, as you can see there. The biggest movers are, as you can see, Mahindra up 2.6%, Ashok Leyland up more than 3%, and Bajaj Auto up more than 4%, and Maruti Suzuki, sells motorcycles up 6.4%, Hero Motors. So as you can see, rise, a lot of gains upside to the auto sector. Because of the proposed GST overhaul, tax on smaller cars could fall under the 18% bracket from the current 28%. Luxury and sports cars could also see some relief. However, they would be placed under a special category, attracting a tax of around 40%. That's still lower than the current levy, which includes a special ranging from 17 to 22% on top of the 28% tax. Let's talk about this exciting market. James Thom is Senior Investment Director, Asian Equities at Aberdeen. James, looks like the market, I'm looking across the green on the auto sector, consumption plays, the auto sector really getting a big boost from Prime Minister Modi's GST, a decisive tax cut to really boost consumption in the Indian market. How are you feeling? Are you optimistic about this market as legs to go?
I'm certainly positive about the announcement, and the auto sector had been a relative laggard in recent quarters, so not surprising to see that sector bounce back quite strongly. But from a fundamental standpoint, absolutely, I think the changes to the GST regime will be supportive near term for consumption as it comes through later in the year. And consumption has been weak in India for quite some time now, so this is a real sort of boost to the economy, if you like, given India's economy is so dependent on domestic consumption.
In terms of sectors, consumption plays are not really your thing, right? I mean, you're into banks, real estate. Is this consumption play, this boost we're seeing in the auto sector, making you rethink your strategy?
We do have exposure to the consumer story in India, but we play it through multiple different ways. So not necessarily directly through a sort of consumer staples company, but through, for example, a real estate story. Or you mentioned banks. I mean, in many ways, that is a consumer story as well. So we have a very diversified way of playing the Indian consumer. But as a theme, broadly, we're very positive on it, and this will make us incrementally more positive. Obviously, there's still detail to come through as to how the reform to the GST regime will play out and exactly what this means for what sectors, for what companies, but we will be working that into our thinking from a portfolio standpoint.
This GST reform, do you think it could mitigate any negative tariff impact on the economy?
I think it could. I mean, the economists, I think, are still working away at the numbers. I've seen estimates that it could be as big as a 1% boost to GDP growth. And if you compare that to estimates of the tariff impact on the economy, that ranges, well, depending whether you're talking about 25 or 50%, and we'll see how that plays out. But even at 50%, it might be 50, 60 basis points impact to the economy, because really India is a domestic consumption story. Exports is a relatively small contributor, so this could more than offset that impact of tariffs.
As a market, with China slowing down, India seems to be the darling in the EM space. But if you look at how the markets have been performing, they've really delivered returns. They've really delivered, but getting a little bit too frothy. Even the RBI has come out to say that, you know what, there is overvaluation in the stock market. Do you think corporate earnings really need to catch up, and can they catch up to justify the kind of valuations we're seeing in this space?
So I think there's been a bit of a reset in valuations over the last sort of 6 to 9 months. We have seen India actually lag behind some of the emerging market, other emerging market stock markets and indices, and earnings have growth expectations there have been reset as well. So I think actually India now is trading closer to its sort of long-term averages. It's trading both relative to its own valuations, but also relative to other emerging markets. So I think India is actually looking reasonably well positioned and reasonably attractive at this point in time, now that those expectations have been reset. And I think with these sorts of reforms and stimulus moves by the government and the central bank, India should be quite well positioned for the second half of this year.
Okay, so you like the banks, you like real estate, you like infrastructure plays. What kind of earnings growth are you seeing in these segments?
So we're seeing earnings come back quite nicely. I think real estate, actually, we think the sector has kind of reached its peak in the cycle, and so now we're looking more at the sort of second order beneficiaries, the late cycle beneficiaries, where earnings growth is just starting to come through now as units that have been sold in residential developments and projects are now finally getting constructed. So that's driving demand for everything from paint to pipes to cement, and should drive a rebound in growth there. 20-odd% is quite achievable, I think. Infrastructure, we've been seeing very healthy growth there too. So overall, I think India should get back to pretty healthy double-digit earnings growth.
How optimistic are you about infrastructure? Because infrastructure would mean things like not just roads and transportation, but also logistics. And I've always talked about and wondered about India's participation in the global supply chain story. We've now got Samsung producing more smartphones or more laptops. In India, we've got Apple producing more iPhones in India as well. This ought to bode well for the infrastructure sector.
I agree. I think there's still work to be done from a logistics standpoint. I mean, India has done a great job in investing in road networks in particular, power capacity, but there is more to be done, and particularly as now we're seeing this opportunity emerge, and Prime Minister Modi in his speech on Friday at the Red Fort in Delhi, again re-emphasizing this focus on Make in India, on self-reliance, which is going to drive further investment into manufacturing in India. So to support that will require additional investment into infrastructure.
You mentioned Prime Minister Modi. India known for a market for lack of policy inconsistency. Is this something that still worries you, or are you just keeping this on your radar, or do you think it's overblown?
The inconsistency in policy? Actually, I'd probably disagree with you there. I think under Prime Minister Modi and his several administrations now, we've seen pretty good policy making and reforms. There's been some mistakes, as always in any administration, but broadly I think it's been a fairly consistent path of reform and generally positive for economic growth. And I think the emphasis now with the cuts to GST, the support for consumption, the focus on Make in India is entirely consistent with what we've seen before and should help put India in a pretty good place to see future growth going forward.
India is also a big tech play. A lot of tech companies are based there as well, outsourcing. India also is big on energy transition, renewable energy. Are these themes something that resonate with you as a foreign investor?
They are. I think the IT services sector in India has been one of its great success stories over the last few decades. It's at the moment in a slightly less strong position. It's heavily dependent on its US end market, and corporate customers there are being a bit nervous and cautious around spending on IT, so we've seen a bit of a slowdown in growth, but I think the AI story is a great opportunity for these IT services companies to find new revenue drivers. So over a sort of 3 to 5 year view, still very constructive there. And I think, sorry, the second area you mentioned.
It was about the AI space. It was about the policy.
The green
renewable energy.
So that also is a theme that I think is pretty interesting for India. Probably second only to China. India is spending vast amounts of capital on rolling out its green energy transition agenda, and that's driving opportunities for companies in India as well.
So you like the Indian equity market as a whole, but do you like the Indian rupee? It's pretty weak in the last 12 months or so. Is this something that you're keeping on your radar, something that worries you?
It has been weak, but not particularly weak. I would say the RBI, the central bank in India, has done a reasonable job of defending the currency and certainly has the foreign exchange reserves to do that and to keep doing that. So I think from a sort of macroeconomic standpoint, we should expect to see further depreciation of the currency. Every year we do see that, but within a sort of range that isn't too alarming. And much will depend, of course, on the direction of the US dollar. And if you believe that the US dollar is set to weaken further, that will, of course, be supportive for India and the Indian rupee.
A lot of headlines coming out from trade talks, Trump escalating its trade offensive against India when it comes to buying oil from Russia. Do you expect more volatility in the Indian market in the near term, a big correction? We've seen already a lot of foreign outflows.
Yes, we've seen outflows, although I would say the foreign investor has been pretty absent from the Indian equity story for the last 3 or so years, and it's been one that's been supported almost entirely by domestic capital flows and domestic mutual funds, and those flows remain pretty resilient. We saw a nice recovery of flows in July last month. So that's been what's adding ballast to the equity story, I think, in India. The tariff negotiations will inevitably cause some volatility, and we will see, I think, the additional 25% comes into effect later this month. So I expect the next couple of weeks might be quite noisy, but negotiations are ongoing, and we'll see where that ends up in terms of the final agreement on tariff levels.
All right, James, thank you so much for coming by. Great talking to you. And that was James Thorne from Aberdeen talking to us about the attractiveness of investing in the India stock market. And that's all the time we have for today on Inside India. Keep watching CNBC. Access Middle East is coming up next.